All right, guys, look, I'm going to be honest with you. I made a whole lot of predictions around certain price levels, and there were a whole lot of certain price levels on the charts for Bitcoin that basically have been broken. I mean, if you look at every single level on the Bitcoin chart, it's pretty much been broken. The $100,000 level, well, that's been broken. The 50-week moving average, well, that's been broken. The 95,000 protection level, well, that's been broken. And now I think we just need to accept that it's over. It's as simple as that. We need to accept that it's over. But the question is, what's over? Is the correction over, or is the bull market over? That's really what we need to discuss here today, because the levels are gone. The levels are toast. And whatever it is, something is over here. Either the correction is over or the bull market is over, and we're going to break it down on today's show. It's going to be a big show. I don't like making these kind of shows, but here we are, and we have to deal with what the market's being given to us. Is the correction over, or is the bull market over? Let me know in the chat. Guys, let's run a poll in the chat. In the meantime, let's get the show on the road. Guys, we just can't catch a break. We can't catch a break. We can't catch a bounce. And even like in the depths of everything, even Cloudflare is down. Like half of our, or lots of our Twitter and a whole lot of other websites have been down today. The news terminal's been down today. What a day. What a period. What a period. Guys, we need to talk about what's over here, because something is over here. Something is broken. The market structures are completely broken. And we need to discuss whether the correction is over or whether the bull market is over, because something here is over. If you look at every single measure in the charts, it basically tells a story. And remember, I said to you, look, we can make as many predictions as we want, and we can be as optimistic as we actually want. But ultimately, we have to deal with what the market actually gives us. And today we need to look at every single indicator the market's actually given us and decide whether it is the correction that's over or whether it is the bull market that's actually over. So that's what we're going to be talking about today. If you are new to the channel, you know what to do. Subscribe to the channel. If you're not new to the channel, I see a lot of you are here today. Please help me by just hitting the like button, because it really helps us with distribution. As you know, I wasn't here yesterday. I was in Portugal. I came back today to this shit show. There's nothing worse than sitting on an airplane with bad Wi-Fi and Bitcoin is just breaking down. 95, 93, 91, 88, and you're on a plane and you're getting these things delayed. And you know you can't trade. You know you can't do anything about it. You can't tweet. You got bad Wi-Fi and you just sat on this plane. I just took a sleeping pill and I went to bed. I was like, okay, I'll wake up in the morning, and if there's still Bitcoin when I wake up, there's still Bitcoin. Let's talk about what's actually going on, and let's talk about all the different levels that are happening on the charts. And I mean, you know, I came out in the beginning of this correction, even before the correction, and I made some price predictions. I said, look, the correction will end when we all are convinced that it's going to be the end of the bull market. And I made some predictions in the price. I said, my bottom targets are 95 to 98, 3,200 on ETH, and 145 on SOL. Well, those targets have been obliterated or gone down on the way down. If you look at the Bitcoin chart, and you look at where we are in the chart, there's this channel that has been running since July 2023, or since wait, this is October 2023. There's this upward channel that's basically been going up with Bitcoin. And you can see that we actually broke down below that channel as well. So that level's been obliterated. Then I kind of said, look, we have to go under $100,000 for psychological reasons. I think a lot of people had this level of comfort with Bitcoin that was under $100,000. Well, we broke that $100,000 level like it was butter, like it didn't even actually exist. We defended it for like a week, and then after that week, the bears beat the bulls, and they basically broke below this. Then we start talking about real bull market support levels, because all of those are like great correction levels. But then at some point, you got to start talking about real bull market invalidators, or like, when does the bull market become invalidated? Probably the most commonly used bull market indicator is the 50-week simple moving average. And that's the one that Ben Cowan always talks about, right? Here is the 50-week simple moving average. And what you can see is that was broken at 103,000, right? Now, what Ben Cowan said is, he said, look, if we have 2 weekly closes below that level, he's going to say that the top was on the 6th of October or the 7th of October. And that we are currently going into a bear market. He said he needs 2 weekly closes. Well, we've had 1 weekly close, and currently, as the chart sits, in order to get back above that level, we need a 12% move in Bitcoin between now and Sunday. Otherwise, we're going to have those 2 weekly closes. So that level has pretty much been destroyed. You can see that when that 50-week simple moving average gets destroyed on the weekly, in a bull, generally in bull markets, it doesn't really get destroyed. If you go back in history and you look at like this chart over here and you say, in bull markets, when did this level actually get destroyed? I only found 2 occurrences. The one occurrence was in COVID. So that's here in March 2020. And I think COVID, we can all agree, was a very, very, very black swan. So that level over there. Then in 2021, if you look at the 2021 bull market, I mean, it closed there and there. It closed there. And then over here, it actually went back up. So that was like the 2 weekly closes. But otherwise, if you go back in Bitcoin's history, all the way back to 2017, we generally don't break below the 50-week simple moving average. And if we don't bounce above this, and again, I say to bounce above this, we would need to get to, we would need a 13 or 14% move between now and Sunday, which is not impossible, but this is the reality if we want to respect that 50-week moving average. This is a very, very, very critical level that we landed up breaking below. Then you had the $95,000 level, and I explained to you in a previous show why that level was so important, because that is a very, very, very big support resistance level. You can see that ever since last year, ever since November last year, that level has been the key level. So if you look at the post-election pump, which is this line over here, let me actually make it bigger for the guys that are watching on mobile. That's the post-election pump when Kamala came in. That's the first high, which was the $95,000 level. And you can see that that acted as a massive, massive, massive support and then resistance level. Now we breached that. We basically went through that very, very, very quickly. Then we look at the RSIs. And the rule about the RSIs is that if you look at on the weekly, generally, if the RSI, in bull markets, the RSI will bounce above 45. So I think this is probably the best way to look at it. You can see it over here. And you can see that in bull markets, the RSI generally remains or bounces above 45. Now, if you look at where we are on that RSI, we're currently on the weekly, we're currently on about 37.5. So we haven't respected that bounce in the RSI. The only times that it usually breaks below usually are in bear markets. So you can see when you look at it in 2019, 2020, after the 2017, 2018 run, you can see the RSIs went below 45. Here again in 2014 and 2015. In 2022, which is after the 2021 run, that's when the RSIs actually broke below 45. So we don't really want to be sitting below the 45 level for a long time. And we currently are sitting at about that 37 level. Then we've had a MACD crossover. Now, if you look at the MACD crossover, which you can see one over here and you can see one over here, generally the MACD, when the MACD crosses over, you know that you're going to get into a bear market, or the last few times that it's actually happened on the monthly, you're actually getting into a bear market. In terms of the number of days and the halving cycle days, you know, the 4-year halving cycle people that basically said that like we need to top a certain number of days after the halving cycle, 540 days or whatever the number was, that would have been the 6th of October. And so from a halving cycle point of view, again, we would have topped, and again, we were to be in we're pretty much in a bear market at the moment. If you look at a chart and you look at the technical level of where we rejected, if you take this channel that we've been in since 2017 or 2018, and you take the top channel over here, we actually topped exactly at that channel, which is where we are today. So it's starting to get a little bit scary. I mean, I must be honest, like, you know, I was very much the perma bull, and I said, look, you know, for me, this is a correction in the bull market. But ultimately, when you look at all the indicators, all the technical indicators specifically, I mean, all the technical indicators are basically telling you that it's finished. The number of days from the halving to the end of the cycle, done. The 90, the SMA 21, the SMA 50 done. The EMA 21, we've basically broken below that, which is the bull market support band. That's basically also gone. Literally, the RSI is below 45, which again indicates that we're in a bear market. Now, I always said that there's a 30% chance that we're in a bear market, and there's a 70% chance that we're pretty much going to go up. At some point, you got to look at this and say, you know what, like, as much as you want to be a perma bull, the data is telling you, or the technicals, specifically the charts, are telling you that this could be a bear market. Now, there's one other indicator that we really want to look at now, which for me is like probably one of the last remaining lines of defense that we have here, right? And that last remaining line of defense that we have here is the golden cross. Sorry, is the death cross. So why do I say the death cross is one of the last remaining lines of defense? Because what we know is that in bull markets, when we have a death cross, that usually represents the bottom. So I've drawn it for you beautifully here on the charts. And you can see that in bull markets, here's a bull market, here's a golden cross, here's a bull market, here's a golden cross, here's a bull market, here's a golden cross, here's a bull market, here's a golden cross. We know that in bull markets, when we get the golden cross, that usually marks the bottom, right? Now, we had the golden cross yesterday. And so if we don't bounce in the next 3 to 4 days or 5 days off the golden cross here, then it would put us into the bear market pattern. Because what you can see is when you get a death cross in the in a bear market, here's one over there, generally they don't mark the bottom. So it's very similar to the RSI. Remember I said to you, the RSI basically holds above 45 in bull markets, and then as soon as you leave bull market territory, it goes below. The same thing happens with the death cross. So in the death cross, if we're in a bull market, we should get a bounce now. If we're not in a bull market, then we're going to continue down exactly like we did here and exactly like we did here in previous bear markets. That's one of the last lines of defense, right? Also, when you look at the sentiment right now, and you look at generally when you have legs down in a market, but what you have is you also have some buying pressure. You also have some rallies. A lot of people said, look, we'd go down, we'd touch $95,000 level, and then we'd bounce and we'd have that rally that will basically fool everyone into thinking that the bull market's going to continue. But we're not getting that. We're getting a straight line down. Yesterday we breached the $90,000 level, and it's pretty much feels like it's a one-way road down. No pumps. Someone says impossible to get more than a 3% move to the upside since November 9th. Okay, November 9th, only 2 weeks ago or a week ago, but still. If you look at the number of stablecoins, the number of stablecoins is actually starting to decline. So when people are actually taking their stablecoins out of crypto, you know that's like this has been the whole cycle. People have been putting stable coins in. Now they're getting stable coins out of crypto. There's no market depth. So someone said Bitcoin's market depth, this has come from Unfolded, it says Bitcoin's market depth, the market's capacity to absorb large trades without suffering price swings, has fallen roughly 30% from this year's high, which means that now every sale is detrimental to the market. And the worst thing is that under this environment, we have the ETFs, which are selling like crazy. I don't know if you guys have been following the ETFs. Minus 278, minus 866, minus 500. That on the background of no buyers, no stable coins coming into the market, no buyers to buy anything. It's not a great recipe. And that's why Bitcoin's breaking down like butter and destroying all these key levels. And to make things worse, I tweeted out a few days ago, on November 3rd, I said, the one thing that we really, really can't have right now is a stock market that's going to start correcting. And then what did the stock market do? Literally on the day of this tweet, bang, the stock market actually started correcting. So if you look at the S&P, I really hope that this doesn't play out like I drew over here when we last spoke. But for now, let me delete that and let's just focus on the good stuff. Okay, S&P on the daily, also broken below the 50-day moving average, right? And if we look at where we've been since I tweeted that tweet on the 3rd of November, the 3rd of November was somewhere here, okay? And we are down about 3% on the S&P. Now, at the time, I said, look, the last thing we can look at is, or the last thing we can afford in crypto is a 5 to 10% correction in the stock market. So we're getting the S&P 500 isn't looking very, very solid. It's broken down below some chart technical levels. That's one of the chart technical levels. Generally, you can see when it breaks down below the 50-day simple moving average, which is what you've got here on this chart. Generally, it respects it in bull markets. And generally, when it breaks down below it, it's either just before or it's during a bear market. You can see that over here, and you can see that over here. And so generally, it respects those levels, right? And we broke down below the 50-day moving average yesterday. And the reason, if you want to look for the fundamental reasons why we broke down below it, well, the first thing is this whole argument about interest rates. Because there's no data, there was no inflation data, the Fed is divided, they're flying blind. Some of them are saying, let's cut interest rates, and others are saying, let's not cut interest rates. They're flying blind. In the absence of any kind of data around inflation, one party is saying, look, there's inflation because of tariffs. The other party is saying, well, there's no inflation because of tariffs. Watch out for the jobless rate. And the problem is that they have no data to base their decisions on. And I don't blame them. What do you do? And so you're getting confusion. And as a result of this confusion, you've got now 54. Let's actually refresh this. And the reason why I'm refreshing it is because this changes dynamically every minute of the day. So, okay, now you see, now it's 50-50. Now it's 50-50. You've got a 50-50 chance that we're going to get a rate cut. 50-50. You know, if I ask you, what does the market hate the most? The market hates uncertainty. And what you're seeing in this chart is you're seeing uncertainty. 50% believe that the rates are going to go down. 50%. I would rather have this chart saying 80% believe no rates are going to go down. At least then the market's not uncertain. The one thing the market hates more than bad news is uncertainty. And here we have uncertainty. The other problem that and as a result of the uncertainty, I don't know if you guys follow 𝗕𝗟𝗔𝗘𝗗𝗏. He's the Fed whisperer. He knows what's going on in the Fed. But he's tracking Fed speakers. And you can see like one Fed speaker, one Fed governor, Waller, continues to lay out the case for cutting rates. The labor market is still weak and near stall speed. A December rate cut will provide an additional insurance against the acceleration. But then if you look at other Fed governors, so this is a notable contrast with recent hawkish reviews. I would take the risk that perhaps tariffs push prices higher for longer. This is Lal Brand thinks the Fed should err on the side preventing a greater by cutting rates again next month. So he has two. But then you've got Kashkari, who said basically, look, he's changed his view and he doesn't want rate cuts now. And so we're getting this pull and push between the Fed people, the Fed governors. And remember that their meeting is on the 10th of December. And that's the exact day that the inflation numbers come out. Now, I don't think that they're going to wait for the inflation numbers on the 10th of December to make their decision. Because remember, when we hear from them on the 10th of December, that's after they've had a two-day meeting, right? So 10th of December, there's a meeting. And we need to see whether or not they're going to cut rates. And until then, this uncertainty is basically killing the markets. That's not the only thing scaring the stock markets. The other thing scaring the stock markets is this IT AI bubble. Remember we did that show and I spoke to you about the incestuous relationships between OpenAI, between Oracle, between NVIDIA, where basically like an Oracle or an NVIDIA invest in an OpenAI, but in return, OpenAI give NVIDIA and Oracle a contract, and it becomes this like incestuous loop. Well, the market's starting to have enough of that loop at the moment and starting to start de-risking. And some big names like Peter Thiel's fund offloaded the NVIDIA stake in the third quarter. I think they offloaded something like $500 million of NVIDIA, if I'm not mistaken. Sold around 537,000. That stake would have been worth $100 million. So it's $100 million worth of NVIDIA. As it relates to inflation, if you look at the components of inflation x tariffs, so let's just remove tariffs for a second, and most of the tariffs are already out of the way. So that was what's the word they use? Transitory. So you see, oil's down 17%, coal is down 27%. Wheat is down 7.3%. Corn is down 7.4%. Eggs are down 80%. So it does look like the components of inflation are actually coming down. And I guess the best place to go to is actually to go to Trueflation and to see what I believe Trueflation much more than I believe government data. And also when the government was in shutdown, I was speaking to the guys at Trueflation. They weren't in shutdown. So look, they are talking about a slight uptick in inflation. They're talking about a 2.54% inflation rate, but inflation isn't running away. If I were to make a prediction, I would predict that they are going to cut rates in December. So I think we will get a rate cut in December. But the problem is that the uncertainty between now and then, which is like another 3 weeks of absolute uncertainty, is not really healthy for markets. And as I explained to you, markets don't like uncertainty. The good thing though, or good, good is that there's a lot more people unemployed than we thought. So there's 200 that came out today. There's the jobless claims rises 232,000 versus an estimate of 223,000. So they got 9,000 more unemployed people. Right now, best case scenario for us is that we get lots of unemployment, and then the Fed is under pressure to actually start cutting rates. Cutting rates, and of course, best case is that we actually get no inflation or low inflation. The stock market woes aren't only limited to the US. I don't know if you guys were watching the Japan this morning, but Japan's had quite a rough time. So if you take Japan and you look at where Japan's been since they topped on the 5th of November, they are down about 7.5%. And they're down because they're talking about rate cuts. They're talking about increasing rates again. Now, remember, every time we talk about increasing rates in Japan, this whole boogeyman of the Japanese cash and carry trade unwinding starts to rear its ugly head. And so that means that the American stock market actually starts coming down, because remember, for those of you who don't know what the Japanese cash and carry trade is, in Japan, you could have borrowed at 0 interest rates for a long time. And a lot of people did that. And they took that money and they invested it in places like the US, where they could get returns, right? Like, so if you're borrowing at 0, but you're investing in the US at 5%, that's an amazing return. Problem is that now you have a dynamic where the Japanese are increasing the interest rates and the US are lowering the interest rates. And so now you're getting into a thing where that trade has to unwind. Now, that trade is worth multi-trillions of dollars, right? And so that's basically what's happening in Japan. So all in all, if you look at it like this, you could basically say, look, it's over. I mean, the bull market's over, and we have to accept the fact that the bull market's over. And if you're still here and you're holding, and you do think that the bull market's over, you could probably wait for a bounce to exit some of your bad positions, but hopefully you're in multi-cycle tokens that you actually wanted to hold through a bear market. There are things on the other side that are probably worth talking about, which is, let's say, the bull case. I've painted the bear case for you. I've showed you how every single indicator has basically melted down. Mainly those indicators are all technical. But there's another side of it which is not technical. And I want to show you the other side of it, which is not technical. And then we've got to make a decision as to whether we err on the side of technical or whether we err on the side of fundamentals. So when I look at the other side, I said the following. First thing is, very simply, fear and greed. You know that when sentiment in the market is bad for long periods of time, then it's a good time. It's a good time to actually be buying. Historically, every single time, and you can go back on the charts, every single time the fear and greed goes low, and every single time the fear and greed gets to these levels, which is now where it is, 8, 9, and 10, every single time. I mean, this one looks like it's a very small bounce, but let me take you to it I mean, you see, that's not small. Like, look at that bounce over there. That's a real bounce. Like that is a bounce from 3,900 to that's a 200. That's 160%. So what you can see is every single time without fail that we get to levels of 11 and 10 on the extreme fear indicator, it doesn't last for very long. And when it does, we get a bounce. So that's where we are at the moment. So I know it's not a technical indicator, but this goes against the technical indicators. And if nothing else, this indicates that we'll potentially get a bounce. Speaking of that bounce, we could get the bounce because of the death cross. So remember, if we are in a bull market, or if we are in a bull market structure, then this death cross, which happened yesterday, will take us into a bounce. It's happened every other time in a bull market. So combine the fear and greed being very low with that, we could get a bounce. Now, the bounce, where will it take us? That's another subject for another show. We'll cover that. Another good thing, the CME gap is closed. So remember, we had a CME gap at 92,500. In general, all CME gaps eventually get closed. Actually, not in general. This was the last remaining open CME gap. Is there a CME gap at 20,000? So someone told me once that there was a CME gap somewhere around 20,000.
There is.
Okay, there's one other one at 20,000. So if James Wynn is right, we'll go and close that one. The other piece of bullish news is that if you look at corrections in the cycle, or in any cycle, we're now entering the most extreme correction. So generally, corrections in this cycle are between 20% or 12%, but call it 20% and 30%, or 32%. We're now 29%. So we kind of have to bounce now, because if not, then we're going into these kind of corrections over here. So that's a good thing for me. Like, we're at that level now where we need to bounce. If we don't bounce, well, then you got to concede that the market's over. Raul Paul also says, he says, look, I wanted to put the current sell-off into perspective. Bitcoin minus 32 in 24, minus 32 in 25, and currently we're at minus 28 when he wrote it. We're currently at minus 29. He said Solana 47%, 67%, and 48%, and Sui 69, 79, and 68. So I called up those charts, and you can kind of see that these corrections are not unusual for a correction. They're not unusual. We're not in unusual territory. But I will say the following. We're now at the bottom part. Like, this is we have to bounce now. If we don't bounce now, then the bulls have to concede that the bears actually won this battle. And if the bulls concede the bears actually won this battle, you know what's going to happen? We'll get a bounce. Because that's what basically happens. Because when the bulls tap out, when the bulls tap out and concede to the bears, you usually end up getting a bounce. So that's that. The next piece of good news here is this. So we know that Bitcoin has always been, and I say always, this chart goes back to 23, but this much before, has always been aligned with global liquidity. It's the ultimate liquidity trade asset, right? And look at the divergence that's forming between global liquidity and Bitcoin. And so, unless we break this pattern and for some reason Bitcoin stops being a hedge against global liquidity, which would be a great, like, I don't know how to explain it, but it would be like a very big break in structure for the thesis of the entire asset. You expect that Bitcoin's going to catch up to global liquidity. Markets can remain out of equilibrium for short periods of time, but they can't remain out of equilibrium for long periods of time. And so my bet here is that we have to get Bitcoin and global liquidity aligning. Now, the question is Bitcoin going to go up, or is global liquidity going to go down? Well, the fundamentals are telling me that global liquidity isn't going to go down. Where are my fundamentals coming from? So every single market in the world is now loosening and adding liquidity, including the US, right? So Japan talking about $110 billion stimulus, which is one of the biggest stimuli. I don't know. Whatever. They're having 110 billion. They're talking about they're considering $110 billion stimuli. Stimuluses. I don't know. You have the US. The US is stimmy. Let's just call it stimmy, like Elliot says. It's stimmy. You have the US genuinely talking about a $2,000 stimulus check. Now, I didn't think that this stimulus check was real. I thought this was just Trump being Trump, but he's not. This stimulus check is real. And do you know how I know it's real? Because he's now talking about the stimulus check being distributed around the middle of 2026. It vaguely says the middle of 2026. Remember that in the middle of 2026, it's the summer vacation. And so no one's going to be working in the middle of 2026. But when they come back in like September, they might give that stimulus just in time for the midterm elections. So I really think that this stimulus is a real thing. And it's not a small stimulus. I actually broke down the maths of the stimulus in a show that I did on Crypto Insider. It's this show over here, which, by the way, I think you guys must go and watch, because here it is. It talks about what the effect of that stimulus can be and when it can actually happen. There's a link below if you guys actually want to watch that show, but that's the show over there on Crypto Insider. And the link to that show, I'm sure it's here, because otherwise Johnny is going to pay. Johnny, there, you see this? It's this thing over here. Go and watch that show over here. This one, yeah, that one, because it'll show you the effect that this specific stimulus can have. I genuinely believe we're going to get this stimulus because of the midterm elections that are coming up next year. Trump's going to want to stimulate the economy. That's just basically what he does. So the US is ending QT in December. Ending QT is going to feel like QE, because it's like you've been taking money out of the economy. Now you're not, right? China approved a $1.4 trillion stimulus package. Japan is talking about a $110 billion stimulus package. The US is issuing $1.9 trillion in Canada every year. Canada is restarting its QE program. So generally, if you ask me which way is this money supply thing going to go, I kind of believe the money supply is going one way. And then it's about a catch-up trade from Bitcoin. When will we get the catch-up trade? Well, I mean, this chart already looks a little bit disconnected to me. But, you know, charts can remain disconnected for quite a long time. So that's one of the reasons. The other reason why I think we might be bottoming is because if I look at the ETFs, massive outflows from the ETFs, over $2 billion flowing out of the ETFs over here. When do the ETFs usually sell? Usually at the bottom. So if you plot every time that there's been large outflows out of the ETFs, that actually marks a local bottom. Here's the chart over here. You can see it here. You can see it here. You can see it here. When the US, when the ETF sellers start selling, that usually marks a bottom. If I look at the USDT dominance, and I look at this trend line that the USDT dominance has been on, now the USDT dominance measures the dominance of USDT relative to the entire crypto market. So naturally, because the crypto market is naturally growing, this is going to be a downward sloping trend line. But it's been at this resistance level over here, and every time it touches this resistance level, we usually bottom. This time we haven't respected it. So you kind of got to think maybe it's going to turn. I want to talk about these top indicators. None of them triggered. I don't want to spend too much time on it because I actually believe that these top indicators are inaccurate because they're all built around retail. And this is an institutional cycle. So I'm not going to pay too much attention to those indicators, but safe to say that none of them have topped. The other thing here is if you look at Bitcoin dominance, the Bitcoin dominance chart is the dominance is actually starting to drop into a correction. When dominance drops into a correction, it's a sign of confidence. Because generally in a correction, people are running away from risk and they're running into the safe havens, which means that they're running away from altcoins and they're running into Bitcoin, but that's not happening in this correction. And so that gets me to feel that this may be a correction in a bull market and not the end of the cycle. Also, as I said before, I've been around for multiple corrections and I've been around for multiple crashes in this market. In the end of a cycle, in the end of a 4-year cycle, generally something is broken. Either the market structure is broken, the macro conditions are broken, people lose faith in the asset, and that's not where we are at the moment. I tweeted about this the other day. I said, been around for multiple bull and bear markets, 2001, 2008, 2017 crypto bear market, 2021. When markets end, either something breaks or belief in assets crumbles. And I don't think the belief in the assets has crumbled at all. In fact, if anything, I think it's the exact opposite. So, and someone else says, if this were a true macro top, bonds would be screaming higher, the Dixie would explode as people ran into safety, the VIX would go up to 40, credit spreads would widen, and Bitcoin would fall 25% in a single candle. We've had none of that. We've had a normal, healthy, violent, mid-cycle washout. There is the possibility that we are reliving this, which happened in 2021. There is a possibility that we're reliving this kind of setup, where it was a brutal correction. Everyone was convinced the bull market was over, and then we got the bounce, and the bounce took us into all-time highs, albeit not all the all-time highs. So you've now got the bull case and you've got the bear case. I've showed you both. I wanted to make a point of actually showing you both. The main thing that what you'll realize is that it's become a game between the technical and the fundamentals. The technicals, every single technical level for a bear market is triggered. Like, call it what you want. Are there any more that can trigger for us to get to a bear market? Like, there's no more.
There's only air beneath us.
Only air, that's it. Like, if you're going to base your analysis on lines on charts, we're in a bear market. If you believe in the fundamentals aren't pointing to it. So now you kind of got to make a call. The technicals are telling you that the bull market is over. The fundamentals are telling you that it doesn't really make sense to around liquidity. And so you have to basically make that call now and decide. I made the call in the beginning of the cycle. And I said that, or in the beginning of this correction, I said, look, I think we can actually go down and this could be the end of the bull market, but it might not be. And so what I did was I put myself in assets that I don't mind holding. Solana, BNB, Hyperliquid, ETH, Bitcoin, the stuff that I don't mind holding for multi-cycles, Zcash, all the stuff that I don't mind holding for multi-cycles. And that's pretty much what my portfolio looks like now. Now you may look at it and you may say, well, run, if it does bounce, you're not going to get the best returns. It's fine. It's called risk management. It's called capital preservation. And for me, I understand that capital preservation is much more than trying to nail 100x. If you've got big balls, right, then you should go and see a doctor. No, sorry. I mean, if you do have big balls and you want to be deploying right now, then, I mean, and you want to be deploying into lower caps, then yeah, you can do that. Sorry, hold on. Okay, so yeah, if you do have, if you do have big balls, then I'll leave a referral link for urologist, and you should go and see the urologist. Yeah, just use my referral link, so that, because I'm not making money on exchange referrals anymore, so maybe you can just use my referral link, you know, when you go see the urologist, or you can just deploy money into small caps. Anyway, so that's where we're at. I wanted to bring you honest, open facts. It looks like it's a game between technicals and fundamentals. Yeah, it looks like it's a game between technicals and between fundamentals. Take your pick. I think importantly, from a technical point of view, we need to bounce above that 105,000 in the next week or two. If we do that, then the bears will eat their words. So that's what we're basically looking for now. Oh, Cloudflare's fixed. Amazing. Run got PTSD from Luna. Bro, if you lost what I lost with Luna, I got PTSD. Yeah. 𝗕𝗃𝗃 was right. Up until now, it looks like 𝗕𝗃𝗃 was right. I mean, we've got to give it to the guy. The guy's amazing. The guy's amazing. Someone says Run's got small balls. Bro, I've got the referral link. Cool, guys. I want to remind you of another thing now. So it's Black Friday next week. Next week is Black Friday, right? So some of our partners have started their Black Friday specials. I really recommend that you take up some of these Black Friday specials because they're fucking amazing. I'll show you two. So Bitfunded has an amazing Black Friday special. So basically you can buy bundles. So you can buy 6 challenges and you pay for the price of 3 challenges. So you're basically paying like 50% off on, so I think on 6 challenges you're paying like $200 or something, depending on which challenge. So $237 for 6 challenges. Go and this is the best way to trade with using other people's money. Amazing Black Friday special. There's a good one there. Okay, then there's another one that I want to talk to you guys about. And I want to say at the onset that I was vehemently against this special for Black Friday. Because what it does is it discounts Frontrunners by over 50%. And I was like, Frontrunners we want to keep it a small exclusive group of people that want to be with us in our community, get the calls that all happen in Frontrunners, etc. But when I run this place, I run it like as a team, and the team in Frontrunners said, no, they want to do a Black Friday special. So I had to agree. So the special for Frontrunners is you're getting 50% off if you take an annual package on Frontrunners. You pay, instead of paying $2,388, you're paying $1,199 for the year. As I say, I wouldn't have given that special, but the guy's done it. It basically discounts Frontrunners to under $100 a month. That's fucking crazy. People are paying, the guys that are in Frontrunners paid $199 a month to be there. So if you want, those are the first 2 Black Friday specials that we've got. We're going to keep bringing you Black Friday specials between now and Black Friday. Yeah, my feeling is use them because you're not going to get deals like this again for a long time. Someone says no money for Black Friday. 𝗕𝗃𝗃 needs to run Banter now. Okay, I mean, that's great. I think you should. I agree. I think 𝗕𝗃𝗃 should. All right, guys. I think that's it for today. Let's quickly just check the markets before we go. Maybe we've had that bounce. Is it possible we've had the bounce? You know, this is because of Cloudflare, bro. So this is all because of Cloudflare. It's their fault. It's Cloudflare's fault. All right, guys. We'll see you guys again tomorrow. Until then, remember to go and watch this show that I made on Crypto Insider about the stimulus. It really shows you the exact number that you can expect to get and how much it and how much it would actually do to the market. So I'll see you again tomorrow. Until then, trade well, my friends.